So I'm going to walk you through some live trades of mine to show you a simple yet effective swing trading strategy. So this is a 1-minute chart of the micro ES futures. Futures I have found are way easier to scale from a beginning account size to a large account size compared to day trading stocks. Because with futures, you can start with an account roughly below $1,000 and you can have your risk per trade anywhere between $20 and $40 per trade, depending on your exact trading strategy. And whereas day trading stocks, you generally need an account over $25,000 to avoid that pattern day trading rule. For me, when I day trade futures, I am looking for reversals. I like to keep it very simple. That's all I do. All I do is look for reversals in the market at extremes. A lot of people get bogged down with trying to trade every last move that the market has, when it's better to just stick with one kind of style and master that style. And so for me, I have found that I find trading with reversal trades a lot better. Generally, you hear a lot of times the trend is your friend, and that totally is true if you can get in good spots, but I've always found that trading reversals is a lot better in terms of risk reward and just for me personally. So what I do is it's very simple. I look for reversals at the extremes, because at the extreme levels of the market, it's more likely for a reversal to happen. And so you can see this is all I have on my chart. I have no indicators. All I do is I have drawings, and you can see I have boxes, and those are essentially my support and resistance levels, and then I have some lines for trend lines, and that's it. And then from there, all I'm looking at is how the market is reacting to those levels. And so you can see here we have an extreme low for this day, and then also you can probably draw it from the left here as well. You have a high up here, and you can see the market sold off, and now it's coming back up, and it's touching this level quite a few times. And so that gives me an indication that, hey, this market is starting to lose some steam here. It could potentially look to go down. And so I kind of have a couple of important rules. Is I always need to be trading at a strong level. That's number one. So we have a strong level up here at this high. And then you want to make sure that the trend you're going against is broken. And so here you can see I have this uptrend up here, and you can see that that uptrend is broken by I created a support line here, and it's broken through that. And so that's another big key thing, is because, well, first off, because these trades are inherently counter trend, we don't want to just start shorting against that. And so that's why you want to make sure that this trend is broken, because, well, the market, if this trend was still in place, it could just keep going up like this. And if you then just betted that the market was going to go down because, well, it's at our level, but this uptrend was still in place, well, that trend is just going to break through. So you have to, it's about having those few solid rules to actually have a reversal workout. And then lastly, you want to make sure you have some kind of pattern play out for it to reverse at that level. And so what we're looking at here is those patterns, I think, playing out. So we have this level up here, and then we have our trend broken, and then the market's making one last attempt to push this high. And so you can see here in my recording here, I'm actually starting to look for an entry here, and I'm looking to see, okay, if the market breaks back down here and it's essentially failed off of these highs, and actually if we draw a line right here, this is it bounced off of pretty much the exact high here. And so the idea is, the market's gone up, it's broken its uptrend, it's making one last attempt, and my thought is, okay, if it breaks down here, it's going to then fall down at this point. And so that's where I want to get in, is at that level when it breaks down. And so you can see here I put in a order to go short, And then what this drawing here is doing is it's just an easy way for me to calculate my risk reward. And so that's a really big important thing when you're trading, and especially what's great about swing trading is your risk reward is in your favor. And so I like to go for, at a minimum, 2 to 1. And so you can see here the amount of risk I have is twice my reward. And so I don't have to be right very often for this to work. And so, or for it to be a profitable strategy. And so because of that, that allows you to just play the game of trading and let things play out. And you can see down here, I have other areas of targeting, and sometimes I will go for more than 2 times my risk, but that really depends on my read of the market and what's going on. But generally, I like to go for 2x, because again, if you just have a 50-50 win rate, and you're only right half the time, but you make 2 times how much you lose, well, you're gonna come out ahead. And so that's all this is. That's how my strategy works, and it's very simple. And really the hard part is just being patient and waiting for things to play out. And so these take a while to play out, and so I'll definitely skip through this a little bit for our video. And you can see the market kind of goes against me a little bit, and you just got to let it do its thing. I kind of have a rule of, once I'm in the trade, I don't touch it, because if we just go back here, there could have been times like right here, it looks really bad. Like maybe it's made a pullback and it's just going to keep going higher. And that's totally possible, but you don't know what's going to happen. You know, you have your reasons why you got in the market, and you got to let things play out. And here, at this point, it looks really good. And even at this point too, you don't want to then say, oh, I want to move my profit target down to here because, well, it looks really good, and that's greed coming into play. You don't want to do that either. You had your reason why your profit target was there, and so you got to leave that there as well. And so we'll just kind of let this trade finish. I think it closes out pretty quickly here, and that's my trade for the day. Generally, I will find a couple of these a day, or even one, or sometimes 0. Really depends on the day. So let's jump into our next example. So you can see here I have some levels drawn of places where I think it's highly likely that the market is going to reverse. And here we have one down here at the lows that we are at. And you can see that there isn't really any solid trend line. I'm trying to find a trend line to make sure that it's broken. And then other than that, you're just looking for the market to essentially test the level and then bounce off of it. A really good pattern I like is a head and shoulders, which can look simply like this. Is, the market makes a bottom, it makes one last push lower, and then it makes a slightly move higher and then comes down a bit. And essentially the idea there is the market was in a downtrend, and then all of a sudden it's bottoming, and the idea is potentially it's going to start an uptrend. And you can see I'm starting to look for this spot here and say, okay, where's my risk? What would my target be? Generally, you want to get out before a level, and so that's why I want to get out before the market gets back up in here, because based on those levels I have drawn, well, that's another likely spot that the market is going to reverse. And so we want to wait for, again, the market to break this trend line and then get in. And so the market then actually breaks this trend line and starts to go in my favor. And so this one works out pretty quickly in my favor compared to that last one. And it's great when that happens. And then I get out right before we get to this level. And so you want to get out, when you hit that area. And so it's not a huge deal if it's before or around it, because again, these levels they're thought of like zones. The idea is this is a support or resistance zone. The market is going to find resistance somewhere in here. And so another thing is I only trade a couple hours of the day. You can see the market for me opens at 6:30, and I go generally till about 8:39. And so you don't have to spend that long doing this. You're not going to find a trade every day, and there might be a trade after you got off, but that's just a part of it. And it allows you to not have to sit at the computer all day long, because quite frankly, I personally don't want to. I want to go out and do other things with my day. And so this trade here, again, it takes its time, but that's just a part of trading. You just got to sit through it and let it do its thing. And then I think it ended up finding resistance somewhere in here, but you can see it does blow through this level some too. And so these levels aren't an exact science, right? It's if it hits it exactly, don't think of it like that. The main thing is, okay, in this area, we're going to expect the market to reverse, but you want to see how it reacts to that area. You don't want to just see that it hits a level and then immediately buy it, because you have to see how the market reacts. It could totally just blow right through that level. You never know. So here we have another example that I want to walk you through from another day. And so again, here's our levels. We have our areas, our extremes of reversal, and we also have actually a smaller level here. You can see the market had this downtrend, and then it looked to go into this little range. And so a big reason why I like this strategy is that it allows me to not have to pay attention to a lot of the noise in the market or a lot of what's going on. And so one thing why I really like this strategy is it allows me to just keep things really simple and not get caught up in everything that's going on. It's a really big thing that makes you lose a lot of money when you're trading, is over trading and trying to do too much at once. And what this does is it allows you to just focus on key points in the market and have a predetermined plan of what to do in those areas. And even then, it's still hard to be consistent trading. There's still times of where, I'm nervous and I skip on a trade, or I'm nervous and I jump in a trade too early when really I should have been patient and sat there and waited for a better setup to come. Here is a good little range here, and you can see the market has bounced off of this area quite a few times. And so for me, I think that's a good reason to think that, okay, we have a pretty good resistance level up here. Let's look for a potential reason to get short off of that. Now, because this is a weaker level, I would say it's more in the middle of this range. Again, I like going off of the extremes because they're more likely to reverse. This, I think, is less likely to be a stronger level, even though you can see that it's bounced off of it multiple times. I like to wait for something I call a failed breakout. And so what that is, I think it's very clear to see here, is you can see here the market has we have a solid level, and the idea is the market makes an attempt to break out of that level and it fails and comes back in, and then at that point generally it reverses, and you can look for a trade on that reversal trying to capture that move. And a lot of times this is a really strong, if you're a breakout trader, this is a really strong long signal. Here you look, oh, the market's sold off, it's broke its downtrend, it's chopped, it's finding some strength, and here's the breakout. And a lot of people see that, oh, I want to get this move all the way up here, because they think it's going to swing back up from there. And that could be a totally profitable strategy, but for me, that's not what I do. I look for the reversals. And so here I look for it to potentially go short here, and I actually get nervous here. And I would say because this is kind of a weird level or not an extreme, I get more nervous and less confident. And you can see here I start putting in my risk reward, looking for a move down to here. I think that's plenty of room to the lows of this range, and I end up missing out on this because I get nervous. I actually put in my order here, and maybe if I got lucky, the market would have come up here and got me in, but it ends up just selling off too fast. And so that, again, that's a part of trading too, is sometimes you hesitate, you do put the order in, but it's too late. And trading can be fast and brutal like that sometimes, and you just kind of got to move on. And even so, you can see that here the market did end up selling off back to that lows, and my read was right, and it's frustrating to see that, but that's again, that's part of trading. And so if we kind of move forwards to another spot, now we're at the lows here, and I'm going to look for a long, because the idea is, oh, maybe we're still in this range. And so I'm looking for that downtrend to break, and then look for a long opportunity with the idea that we are going to hold this low. And so from here, I enter, and the market starts to go in my favor. And again, you're looking for that risk reward ratio of 2 to 1. And so the market ends up getting pretty close, or moving in my favor pretty well. And I believe it actually ends up selling off and not working out. And that's totally fine, right? That's a part of trading. The main thing is following your strategy, because again, the probabilities are going to play themselves out, right? We're just looking for a reversal here up to here. I think that's totally reasonable, and it's not going to work every time, and it doesn't have to work every time. But again, it's always following that plan of, okay, we have a level that we think the market is going to find strength at potentially, and then we have our potential downtrend broken. It's starting to show some strength here. I think my signal for getting in was, we have some choppiness here. We had one last little push lower here. It reversed, and then that's kind of your signal to get in and see if the market starts going. And it went about halfway in my favor before the market ended up continuing lower. And that in some ways makes total sense. The market was in a downtrend. We had some consolidation. It tried to break higher. That failed. And then it's going to just keep that downtrend going. And that's totally possible and clearly happens. The market's, your read's not going to be right every time, and the market's going to go in whatever direction it wants. And you just have to play your strategy, and it's going to work sometimes, and it's not going to work sometimes. And you're going to have times where you're doing really well trading, and times where you're not doing really well trading. So that's all I got for today. Hopefully this has shed some good light on a really simple way to start day trading and building an account. Now, definitely take things slow. Always paper trade when you're starting out, because you don't want to risk real money on something that you're just learning. If you do that, it is very easy to lose money, because in trading, mistakes are money lost. And when you're first starting out, you're going to make a lot of mistakes. I make mistakes every day, and I've been doing this for a long time. So make sure to paper trade and then slowly move on from there.